This is Tom Nunemaker with Capital Discussions. This is my trading update for Friday, August 29th, 2014. So we're looking at the VIX 2 days, 3-minute bars, and we have the VIX on the bottom with the colors, the ES futures, which is the red, and the near-term volatility futures, September, October, November. So the market opened higher, sold off, and recovered nicely, stayed in positive territory pretty much the rest of the day, closing up. And our futures are well spaced. There's no chance of them crossing. I always like to think of Ghostbusters crossing the beams, and we're not doing that. So we're in contango, not backwardation. So market's pretty content right now. We're going into a long weekend. Here's the numbers for where we closed. The ES futures closed at 1998.75. The SPX 2003.22 up 6.5, 0.32%, and the Euro US dollar was down 51 pips to 1.3131. Now I have a bullish trade on with this, so I did lose a little ground, but there's still lots of room. It's a wide trade, so we'll go into that in a minute. You can see the VIX futures. They're all nicely increasing, so that's all contango. Everything's hunky-dory. Let's take a look at some price charts real quick. Here's the ES futures, and this is the overnight action. You can see when the volume starts picking up, this is when the Europe markets open. I'm in the European time zone, so looks like about 8:30, 9 o'clock Central European time. A little bit of volume, more than the overnight in the Asian market. And then when the US market opens, then we start getting the real volume. Had a little bit of a volume spike at the end. Market rallied a little bit more. But let's see, if we put it in context, how was it over, say, a year of daily bars? So this contract doesn't go back so far. This isn't a continuous futures contract, it looks like. This is the one that expires September 19th. But during the life of this contract, it looks like a million volume is kind of on the low side. It's not the lowest, but it's not definitely the highest. We've had over 2.5 million on some of these big down days. So definitely a little bit light on volume. Let's take a look at some of the other charts. Here's SPX, basically the same type of chart you'd expect for the ES. And here's our 3-month daily bars. So it looks like we're definitely in congestion right here, kind of around the 2,000 level. Let's take a look at the Euro. So the Euro closed at a multi-month low. This is a 6-month chart. Let me go back a little farther. Let's do 1 year. Looks like we just hit about almost a 1-year low today. So I'm hoping it won't go too much lower, find a little bid and kind of stabilize here. I've got a bullish position, so I'd like it to kind of stay where it is or maybe go up, but we'll see. It's a small position. Now let's take a look at option view. We'll start out with the SPX trades. So here, let me take some of these. Hide toolbar, and I think I can hide this one too, right? Let's see, hide matrix toolbar. There we go, it gives us a little bit more room. And I love these arrows right here. These are great to just kind of move all these strikes to where you can see them really quickly. So on the SPX, this is our September 19th trade. Remember, this is the normal monthly expiration. So if I put this toolbar back on, I've got these predefined formats. And here's how I have mine formatted, just in case you're curious. These are the base defaults, so if you want to reset it ever, you can just get those. Here's the default that I've set, so here's my number 1, and then I just use a 2x3 up here, which is last change trade, and it shows it up here, high, low, existing position. So I like to have the trade and existing positions next to each other on the matrix and up here, well, where the options are and where the actuals are. And then I show the last and the change, and then the high and the low. So on the options, this is the market price, original price that I paid, and you can see that. MIV is the mid price of the options, delta, existing position trade. Now if I go to my number 2 default, all these on the actuals stays the same. Now this is market price, the delta, open interest, volume, and existing position trade. I always leave these two together. And then the number 3 is market price, original price, volume, and time premium. And these are handy if you're like selling covered calls or something, or just want to see how much time premium is in an option really quickly, because you can see if you're getting close to where you might be assigned. So if we just punch these numbers up, if I go number 3, here's my volume and time premium, and you can see pretty good volume on this September 19th versus the weeklies. These weeklies are fairly far out. This is the 4th and the September or October weekly number 1, so there's hardly any volume on that. Now let's look at the number 2 format I've got set up, open interest and volume. This is really handy if you're going to check something to see how it's trading. So for instance, if I pull up something like the MNX, I don't know if anybody's traded that. I traded it back in 2006 briefly until I noticed something that was a little bit alarming. Open interest and volume on the MNX is really pitiful. I remember I had a position on, and I looked that, and my position was 80% of the open interest, so that's when I stopped trading the MNX. So this is really handy to check the open interest and volume quickly. I'm going to delete MNX because I don't really want to trade it. Let's go back to SPX, and here's my default formatting with the market price, original price, mid pricing, implied volatility, option mid price, delta, and an existing position trade. And I've seen people put the trade and existing position different columns. To me, I like to keep all the data columns together and then the trading pieces separate, and I put the trades that I want to potentially put on over on the right, so I keep the existing stuff closer to the all the data, if you will. It's just my way of keeping it clean, and maybe you like it, maybe you don't, but that's how I have it set up, just FYI. Okay, so let's take a look at that letter T, which is maybe I have to turn this toolbar off so you can see the whole thing at once. So here's my broken wing butterfly, an 8 lot with a put debit spread as a hedge, and we're up $500 on this trade right now. And here's the analyzed position. Oh, let me check the put volume or volatility, 9.8. We'll punch that in here. Make the chart match the at the money puts. So that's this. So that's September 9th. Here's our chart, and 95% probability of profit. Expected return 1600 plus or minus 1200. So that's positive expected return, which is nice. And remember, we're not playing for the expiration line. We're playing for one of these lines in between now and expiration. And in this case, it would be T plus 10 or T plus 15. Depends on, what profit you want. If I zoom in a little bit on this, I'll maybe zoom in a lot. This line is actually a pretty good looking one to me. 96% probability of profit, and the returns are nice. If the market can just stay where it is to sell off a little bit, we could be looking at a, what is that, 1700. Make this yield. It's a 5 to 10% yield, so something like that would be pretty nice. So that's kind of what we're aiming for. Might go up a little bit, we get a little bit less return, but remember, if it does that, I didn't want to close that, we will do this right away, and that will raise this expiration line up. So if it goes up farther, obviously we're not going to get as much for this, but it will still raise up that call side expiration profit line. So the next one we'll look at is our December trade. This one is in the call, so I have to grab this divider so we can see more calls. And the arrows, these are great, I love these. So this just pops it right over and down. So here we go. Here's our 10 by 20 by 10. We're down 99 bucks on a $2,000 trade, but there's 111 days to go. So this is a 4-month trade. Notice this is typical with a butterfly. It's flat, 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 flat. And it's even almost the same P&L even 28 days from now. So it's we have some time to wait on this. Now, if we do have a volatility coming out, say that's zero vol. If we take out 2 points, what will that do? It raises it up, as you see. Let me zoom in a little bit. So what happens if, butterflies are short delta normally, right? And people are always worried about that. They want to get negative delta. Well, what happens when when the underlying moves up, the volatility typically goes down, right? So even though your risk, your P&L graph right here is like that, if we drop the vol, say 1 point, boom, it just moved up a little bit. Drop it 2 points, moves up a little bit more. So we're getting helped by volatility and hurt by delta, so it kind of averages out. And if you look, we're, what is this? Minus 25 delta, and our Vega is minus 275. So yeah, they kind of balance each other. But for this trade, there's a lot of room. Even at this, what is this? This is T plus 28, so in a month, there's a 67% chance this will be profitable. And if the market stays where it is or sells off, we could potentially make, let's see, 400, 1,000, 1,200, 400, 1,500. So we could make, $400 to $1,000 profit. Well, remember, this is only a $2,000 trade. So that's a 20 to 50% profit in a month on this trade. So remember, you're not playing for the expiration line, you're playing for the lines in between typically. Unless you are planning on taking it to expiration like Jim is on this trade, he's going to use this as a lottery ticket. He's just going to set and forget, not worry about it, not even watch it, just come back and see December 19th how his trade did. I'm probably going to trade this differently. If the market moves, I'll adjust it. If it stays in here and collects some theta, I'm going to take some profit. And what other trade do we have? Oh, we have our little remainder from this weekly option that's expiring. There's still 2 weeks to go on this thing. It's up about 1250. If we look at the risk graph, remember, I basically locked in my profit right here. There is a possibility if we expire at 2005, which is almost where we are right now, it could come in with a nice profit, add in another, 400 plus. My guess is it won't, but it's potential. It's right there. So those are the SPX trades. Here's the Euro US dollar futures trade. And I'm not getting any quotes for some reason. I did save the charts in Snagit. That's what I use to capture these things. Let's see if I can make this so you can see it. Oh, Windows. Come on, I don't want it to be full screen Windows. Alright, well, I think that's about as good as it's going to get. Alright, so let's find our futures options trade. Here it is. Okay, so that's what our futures options trade looks like. The euro did sell off a little bit. Remember, we're negative delta. Is this the one? No, that's the wrong one. SPX. I gotta find the right one, sorry. Oh, this is it. Okay. So we're down $279 on this trade. Our delta is long delta. So we're actually losing money with delta as the price moves lower, which is not really optimum. But we have a lot of room. Remember, this is 71 days out, and it's still 97% probability of profit. Our problem will be if this moves down quickly, we'll have to do something about it. If it just stays here for a while, we've already burned off a few days. If it burns off a little bit more next week, you can see the lines start to raise up nicely. Even if we get into 36 days from now, about halfway in the trade, that gives us a little bit of breathing room, and that's 1 standard deviation. So we do have some, we got to watch this a little bit because it has sold off just a little bit, and we don't want it to go too far. And remember that price chart we were looking at for the euro, we've hit about a 1-year low. So there is a good chance it could go lower or stabilize, or it could snap back. It's hard to say. Right now it looks like a nice downtrend though, so I would bet on sideways to down before I bet on up. But to be that as it may, we still have lots of room. Let me see if Option View has data for it. Let me try it again, back trader. See what we can come up with. Okay, looks like we've got some data now. So here's our arrow, there's our trade, and yeah, that's where we are. And here's our expanded risk graph. Okay, so what would we do if it goes down? We could add another debit spread, and this keeps moving on me. So we could just, add another one of these if we needed to. And I could use this feature in Option View where I put them side by side. Let's see if I can get that to work. That's this thing, right? Okay, so I don't want to change that. And I'll zoom in a little bit and take out some of the lines. Can I do that here? Yes. Okay, that ought to be enough. All right, so if it does keep moving down, if we just buy another put debit spread, it changes it like this, extends it a little bit. We could just buy a put, that would do this, that would stabilize it even more. Now because this is a futures option, we could also, let's see, this is a November future, so we could buy or sell a December contract, and that would take our delta negative. It basically rotates the whole trade, and I wrote an article about rotating a trade, but you can see that if it keeps moving down, we could rotate the trade with just a simple futures contract, and those are very liquid, so they get filled very quickly. So those are some ideas. Right now it's a long weekend. I'm going to take a break and call it a day, enjoy the 3 days off, and I will see you next Tuesday at 4:30 for the market analysis. I've invited Mark Principato to come. He's a technical analysis expert, and Jim Bergio and I will both be there. Also next week, remember, if you go to our members area, you can go to our calendar and you'll see, sorry, I had to log me in, Michael Benklefa is speaking on Thursday. And then in 2 weeks we have Greg Harmon. I'm trying to get Mark Sebastian to speak for us, and I'm not sure what day he's going to talk, but we'll see if he's available. And if you have suggestions, we'll keep trying to get other guest speakers, or Jim and I can also present something too. So I had a nice call from Frank Fahey at Discover Options. Nice talking to you, Frank, and maybe you can join us as well one of these days. Just let me know if you have a day or a topic you'd like to come speak. So thanks a lot, everybody. Have a great Labor Day, and we'll see you, remember, on Tuesday at 4:30 for the next market analysis. This is Tom Donamaker. See you later. Bye.